important point you make, and this is something I've seen very close with a few fund houses that I've worked with. A couple of them have had, or at least one of them has had a lot of bias towards, let's say, value investing, and then worked with an organization which has been completely on the growth side of the business. So you do actually, if you buy one fund each from each of them, then you're truly diversified. So actually, in the Indian parlance, there is a great space for somebody who's neither of them.
Yeah.
Who's neither value nor growth, and that's something I keep debating in my head also. That I think there is a lot of merit.
I think the phenomenon that you described, even I have witnessed it, and the phenomenon that you described actually results in winners rotating
very quickly,
heavily. Like every 2 years, the best performer changes dramatically. That is because asset management companies and mutual fund corpuses have become very, very big, but they're still being run with some kind of bias in terms of, like you said, value, growth, etc.
Right.
The point is that the broad market index, which is BSE 500, or defensive or cyclical, it is everything, correct? So I think that because of these biases, the winners keep rotating, and that causes challenge for the channel partners. What we are actually trying to do is to run a broad strategy where we are value as well as growth, defensive as well as cyclical, large cap as well as small and mid cap, and all of those factors are balanced, but the alpha should come actually from stock picking. I think that is the endeavor, and that is why we present all that data.
I think it just makes imminent sense, and then to kind of be kind of neutral to your style, and then present the data so that it's easily understandable. And the other thing, Aashish, is that if that is coming consistently, let's say quarter after quarter, then over a few years, even the recipient tends to understand the message that the fund house is trying to send out. So aisa nahi hai that they kind of are, blocking out the messages. They do understand then finally what the core philosophy is.
Just like consistency is crucial for implementation of an investing philosophy, same way, obviously consistency will be crucial for communication and the messaging that you try to send out.
Yeah. So I just will shift focus and pivot to something which we haven't spoken about till now, which is fixed income and debt funds, etc. I can see there's a lot of action nowadays. Fund houses have started speaking about fixed income quite aggressively, etc. So Whiteoak's plans, and what are you thinking about fixed income? How are you planning to go about it? Is there a certain segment you'll go after? Fixed income पे क्या view है, Aashish?
We are, frankly, if you see, our founder, that is Prashant, if you see our team, whatever last almost now 5.5 years plus whatever Whiteoak has, clearly our track record is all centered around Indian equity. And then of course Prashant has track record for global emerging markets, and our Singapore asset management company already has global emerging markets. Regulation and those kind of things, be as it may, our priority will be obviously domestic equity and then global equity. Fixed income, of course, we have a good team for fixed income, and we have a liquid fund and ultra short-term fund. In fact, as we speak, we have approvals for short-term fund and a medium-term fund. But that's about it, at least as far as the foreseeable future goes. As you can see, whatever I told you, liquid fund, ultra short, or a medium-term fund, basically, I would say that 3 to 5 year AAA corporate is the sweet spot of the market. If there is anything which is evergreen in the fixed income space, then it is 3 to 5 year high quality credit. So we will only go that far. We don't have any intention to immediately launch any duration funds or any credit risk kind of products. The idea is to focus heavily on equity, and in fixed income just create the basic products, because the feedback from the channel is very clear that in fixed income at least you should have the basic products which don't have too much risk, but at least enable the channel partners some amount of flexibility.
And certainly when you're launching the asset allocation funds.
Yes, so hybrids, we are there. I mean, we have a balanced advantage fund already, and we just recently received approval for a multi-asset fund. Now, what I've seen is that that's a gap. If you see our industry, I would rather approach fixed income through this multi-asset space, because what I've seen is that in our industry, the multi-assets funds which I find, they are basically balanced advantage fund with some amount of gold, and they are heavily focused on preserving the equity status. Now, my learning is that if you are going to hold for 3 years, then the tax differential between equity and fixed income is nothing much. So then why should you run a multi-asset fund, do all the rigmarole, and then strive hard to keep 65% equity?
Yeah.
I think it's all suboptimal. So the multi-asset fund, which we have received approval for, which we will hopefully launch in the early next financial year, that will be debt oriented. I mean, the idea is to deliver 8 to 10%, 8-9%.
Yep.
See, the problem in our industry is that people have products for 6% and people have products for 12 to 15%.
Beach
They
mein
don't have products for 8-9%. And all the mistakes happen when you try to generate high yield in an otherwise low yield environment.
Yeah.
So a multi-asset fund is a great way to create risk-return combinations. And I think currently what is available in the industry is probably not addressing the right requirements. That's my sense.
So you're saying you'll come to the multi-asset space, but flip it around and make it a fixed income oriented multi-asset so that you get the advantage of the space between 6 and 16.
Yeah.
Risks are lower, volatility is lower, and if you're staying put, then the advantages of taxation anyway accrue.
Yeah, see, because why do people lose money in company FDs? Why do people lose money in all kinds of risky propositions? They are all trying to get to 8 to 10%, right? There is this huge anchoring around 8%, 9%, 10%. But there are no products which can reasonably create that risk return profile. So I think we have to work hard to create and make that risk return profile available to people. I don't think that the moment you launch, there's going to be a lot of buy-in for this. But if there is a product which consistently delivers this, then it can take a lot of share from fixed income options.
Yeah, sounds interesting because there is a space for a 8 to 9% low risk, lower volatility product, which kind of delivers consistently. So I think there is merit in that. Which gets me to my last question, Aashish. I know you want to go and celebrate your birthday with family as well. Last question. Next 24 months, 2 years out, when we are speaking again in 26 sometime, 25 and 26, what would you ideally want Whiteoak to be looking like? When we do this conversation a little later.
Yeah. No, so I think that, if we can keep our team together, work hard, keep the team together, I think that is the most important thing. We have a very good team and we should work hard to ensure that people enjoy and people, I have seen that people want to be in a winning team.
That's true.
Right. And when the team is together is when the organization wins. So there is a lot of cause effect, connection between people and organizations being successful. So if you really ask me that, one indicator or the sole indicator of success 3 years down the line, the sole indicator will be if we have the same team working together, because people work together if they are on a winning team, and organizations win if they can keep good people together. So that is very, very crucial. Second part is, I'm not someone, I generally desist from making forecasts on assets under management and those kinds of numbers. The reason being that, it can land up anywhere. Our industry, I call our industry a double beta industry. Because why I call it double beta industry is because let us say in the long range, the index compounds 12% to 13%, and the beauty of the industry is that if the index compounds 12-13%, and let's say as a performer you are top quartile, second quartile kind of vicinity, then if the index compounds 12-13%, investors give you a lot more money. So what happens is that every 3 to 5 years, there are a couple of years when there are great returns and investors reward you for your performance. And I'm pretty certain that in the next 3 years, there'll be one such big year. And Whiteoak will participate in the industry if Whiteoak delivers performance and if our people are well engaged. But if I have to make a prognosis on the industry, I think just look at the last 18 months. I'm so happy about how the last 18 months have gone. Because in 18 months, people are unhappy because they didn't make returns. Index is in the same place. But look, the market has become 20 to 30% cheaper in last 18 months. Correct? Yeah. Which means that in the next 18 to 24 months, there will be one period of 1.5 years where you will see like this spring kind of, recoiling quite significantly. So I think that's the nature of the industry. For a couple of years, I would put it lightly that every 5 years, the index doubles, right? We don't know which 2.5 years it doubles and which 2.5 years it goes nowhere. That's the challenge. So this is a staying game. If you stay on the pitch, I think you do very, very well. That brings me to my original point that, we need the right people to be able to work together.
So, wishing you all the very best, Ashish, and with the absolute hope and guarantee that you have the same winning team in 26. That will be a true indicator of how well the firm does. Wishing you all the best. Have fun, enjoy yourself, and catch you soon. It was
Thank
great.
you. Thank you. Thank you. Nice talking to you. Thank you very much.
Thank you. Thanks, Ashish.
Thank you.